Section 61, with 150,000 claim from each insurance company, it provides that immediate liquidity for the family members. Hi, welcome to another episode of Estate Planning with Eugene, and today I'm going to share with you something interesting that every financial consultant should know this. Okay, now before we talk about estate planning, where we talk about wills, trust, CPF, LPA or insurance nomination, there's one basic thing that every one of us should know and learn by heart. You see, when death occurs, your client's assets are going to be frozen. And when that happens, liquidity is key because all your client's liabilities will continue thereafter. Let me give you some examples of what are some of the liabilities that will continue even after the demise of your client. Number one, income tax. If your client has actually applied for installment-free income tax payment, income tax will continue to apply on a monthly basis. Number two, car loans. If your client has applied for a car loan after demise, unfortunately, the car loan will continue to be charging until a full redemption is done by his or her executor. Number three, credit card debts are still charging. Number four, any hire purchase that is done on an interest-free installments, all these things shall continue to be charged on the deceased estate. So you see, what happens in this aspect is that all financial consultants should be able and equipped to advise their clients' family members. All these interest payment, installments, income tax will continue to be charged, and the family members will need to continue payment for the deceased. So typically there are two scenarios when things happen, when decease has occurred. The first scenario is this: someone in the family with a soft heart will usually help to pay for all these expenses of the deceased. Number two, of course, if nobody steps up to pay, then it goes simply unpaid. And when it's unpaid, there will be penalty fees. You know, once I received a phone call from a widow that she realized after 9 months after the demise of her spouse that she is actually liable to help her deceased husband to pay for the 9 full months of car loans plus finance charges and penalty fee. Just so happened because she wasn't aware that there's a car loan to be paid. And I hear this so many times. I do not wish to trouble my loved ones. Does this statement sound very familiar to you? Yeah. So why is all these things important? It's because under Section 61 of the Insurance Act, it's called the Proper Claimant Act. Now, under this act, under the payment of living benefits or death benefits, it says that a proper claimant can refer to either the executor, the widow, the widower, a parent, a child, brother, sister, nephew, or niece of the deceased. And what is Section 61 all about? Under this law, the insurer will pay on life policy without the need for any proof of the grant of probate if there's a will, or any letters of administration, up to 150,000 to a proper claimant. So you see, this 150,000 will be actually paid out to the family members of the deceased without any time delay, even without the need to wait for a grant of probate or letters of administration. And the balance, whatever is beyond 150,000 from the policy payout, will only be paid out in later stages after the insurance company cites the proper grant of probate or letters of administration. And this is so important because Section 61, with 150,000 claim from each insurance company, it provides that immediate liquidity for the family members, as all other assets will be frozen pending for the estate settlement. So let's take for example, if your client has insurance policies from more than just one company, which is very common in today's context, you know what? Your client's family members can actually activate Section 61 and claim a total of 450,000, assuming 150,000 under Section 61 from each company. And this 450,000 can be used for immediate liquidity to pay off all the necessary loans, debts, and installments. And only when after the proper process of the grant of probate or letters of administration has been passed, then the executor can utilize the estate to pay off the rest of the loans and to distribute to the family members, which could take months or even years, depending on how fast the application and the approval can take. So as a competent financial consultant, one of the very first things you need to do for your client is to advise them, especially when they have just filed a death claim in the family. Quickly advise the rest of the next of kin to make full use of Section 61, the Proper Claimant Act, to quickly get past and to inject liquidity into the family and to pay off the debts of the deceased. Now, this is especially so when your client, which is the deceased, have young kids, or perhaps a spouse who is not working, who is relying on the income of the deceased, or maybe in some situations having elderly parents who require a monthly allowance from the deceased, or even family members like siblings who are financially dependent on the deceased for income. That's all for this episode. I hope you find this video helpful. Now, if you have benefited from this video, to share it and leave me a comment below.